Well, our observations about the SMB market, which is our core habitat, in fact it's the core focus for both the Commander and People Telecom businesses that we've acquired, our observation is that the SMB market is very robust. It's been incredibly resilient through the last 12 or 18 months where there's been considerable cause for concern economically, but obviously Australia has performed better than other parts of the world, pleasingly. But we've been very impressed with the performance of our customers, the performance of the debtor days within our business, and the things that are generally important measures of the health of one's customers. So no, we're very pleased. No, at this stage, the small enterprise market is our core focus. It is a market that we occupy something less than 3% of the entire small enterprise or small business space in the Australian telco market, and overall less than 1% of the overall telecommunications market is our market share today. So we have considerable scope for growth. We think that with the addition of the People Telecom and Commander sales and marketing channels, that we've got a substantial scope for growth, and we intend to take full advantage of that over the coming years. The last 3 years for the company has been a very active phase in terms of acquisitions. But over the last 7 or 8 months since the Commander acquisition, we've been very focused on internally tightening up the business and integrating the acquisitions culturally, operationally, and obviously commercially. And pleasingly, we've got most of the milestones that we set out for ourselves have been achieved in that time frame. So acquisitions are now something that we will begin to more actively contemplate. But important to stress is that when it comes to acquisitions in our business, if they're not businesses or assets that are very well matched to our core focus, and the particular core focus is that small enterprise market that I've talked about on a few occasions, then we would be very reticent to explore acquisitions that aren't aligned with that core focus. Yes, it's one of the features of the M2 businesses that we have been a very strong dividend returning company since listing. Yes, it was our 11th consecutive dividend declared with these results. More to that point is that something in excess of 70% of our net profit after tax has been our dividend declaration on each of those occasions. So yes, we've definitely been very focused on shareholder return, and that's also a testament to our business model. We're a very light capital investment business model, so we have the opportunity to generate very strong cash flows and have been returning those cash flows to our shareholders consistently for over 5.5 years or 11 consecutive halves. So the board's policy on dividends is where possible to deliver a 70% dividend of net profit after tax. We have done that, as I mentioned. We have no reason to change that as a core policy. Our capital investment demands within the business, whilst growing marginally in dollar terms as the business has got larger, and as a proportion of the overall capital demands on the business is still very, very modest. So I see no reason why that strong track record of dividend returns cannot continue. Yes, we have. We've introduced a dividend reinvestment plan effective for the dividend that we've just declared. Essentially, the dividend reinvestment plan is an opportunity for our shareholders to obtain a larger stake in the M2 business, and we've offered the opportunity for shareholders to reinvest either all or some part of their dividends in return for shares in M2 at a 5% discount to the volume weighted average price for the stock for the preceding period. So we think it's an appropriate mechanism to make available to our shareholders, and I look forward to seeing how it's received. Yeah, well, the next 6 months is effectively the completion of what was forecast to be a very big and transformational year for the company. So the first 6 months has borne that out. We've, as I said earlier, more than doubled the company. In fact, nearly tripled the company on many of the key metrics in the period relative to the previous corresponding period. The next 6 months is very much focused on making sure that we continue to tighten up and refine this much larger business that we now operate. We've had some significant inroads already over the last few months in terms of consolidating operating systems within the business, such as a new company-wide accounting system, a new company-wide payroll system, a new company-wide incident ticketing system, which have improved the information flow and reporting flows within the business, which is very necessary when your business becomes as large as ours. Nearly a $400 million turnover business needs to have those controls in place in order to make sure that it's ready for the next phase of its own growth. So I think as I said earlier, most of the heavy lifting has been done in that respect. So it's about now refining our business and really throwing in extra resource and attention into our sales channels across People, Telecom and Commander and other parts of our business to maximise the opportunity that presents itself to us, and particularly in that small enterprise market, and also in our wholesale business. Our wholesale business is a very strong and growing area as well, and we're seeing good opportunities for that over the coming 6 months.